Look, talking about a really important topic today, which is cash flow. We've been sharing about cash flow and how to get on top of it all this week. So we're going to do a deep dive today into how to actually manage your cash flow so that you can pay all your bills and have plenty of cash in the business as well, which is the whole point of this exercise. Now, cash is like oxygen. So you need oxygen to breathe. Your business needs oxygen, needs cash flow to breathe. And without it, it's actually going to suffocate. And your business could actually be profitable in the sense that you're invoicing out more for your jobs than it's costing you for wages and suppliers, etc. But if people don't pay, or you've got some loans or a whole bunch of other stuff, you can actually run short of cash, which is super, super stressful. Now, there's absolutely no need why you should, and today we're going to give you the most important tool to help make sure that you don't. Now, this tool is a worksheet, which is super simple. If you'd like a copy of it, please just write forecast in the comments, or if you're checking this out later on, just click the download button and the team will boost it straight out to you. You'll find it massively helpful. So, cash flow causes more stress in business than anything else, I think, maybe except for team frustrations. They can be pretty up there as well. Now, let's talk about your cash flow system. If you don't have a system for managing your cash flow and you don't do it proactively, you'll find that some bad stuff's going to happen. The first thing is, what often happens is you get surprised. So you might think you've got enough money in the bank account, but then when it comes time to pay your bills, maybe it's your tax bill or your supplier bill or wages or some other bill, all of a sudden there's just not enough money in the bank account. And you're surprised with it. You thought, hey, like last week or yesterday or 3 days ago, there was plenty of money. But now there's not because some other bills have gone out and you're left short. And that feeling of surprise is massively stressful. You're left sort of scrambling around trying to drum up some money from somewhere to pay the bills that you have. Or you're going to have uncomfortable conversations with suppliers or whoever it is, or even the tax office, the tax man, about the fact that you're struggling to pay. Not fun at all. Next thing is your stress. This causes a lot of stress. And like I said, I think cash flow is more stressful than anything else in business. If you don't have enough, it does your head in. So it makes life and business no fun at all. And last thing is, if you don't really understand it, it's guesswork. So if you don't have enough cash, you're kind of at a loss. Well, why is this? What's actually going on? Why isn't the money there? What's the cause of it? What do I need to do to actually make sure there is money next time? So you're left kind of feeling confused. It's guesswork. What do I do next? And that's not a great feeling, on top of not having the money to pay the bills that you need to. If you get this right, if you've got a great system and you understand your cash flow well, you're going to have clarity. So you know exactly what's due. There'll be no surprises about being able to pay. It'll all be tickety-boo. You'll feel confident as well. So you'll know what drives your cash flow, what levers in your business you need to pull to make it, make your cash flow strong. And lastly, you're going to feel in control. I think this is important. You'll feel in control of your destiny. That's great for you. That's great for your mojo, and you feel really positive. I got to say, everything feels better with an extra 20 or 30 grand in your bank account, knowing that you're covered for everything. So, cash flow. Stressful if it's not good, and if you're on top of it, it takes away a whole lot of stress. You feel really positive about moving forward with the business. So there's a couple of key principles I want to talk about here that are massively important when managing your cash flow. So let's jump in and talk about this. First thing is I want us to focus on causes, not symptoms. So look, we've coached thousands of people, and some of those have come with major cash flow issues, and the conversation is pretty kind of standard. It's like, hey, I've got a cash flow problem, and I want to just stop right there, because nobody actually has a cash flow problem. They actually have a cash flow symptom. Cash flow is just it's like a result. It's like at the end of a bunch of other stuff. So if you don't have enough cash, that's not the problem. It's a symptom. What that means is it's like if you've got the flu or something, you don't have a runny nose problem. That's a symptom. That's a symptom of the virus or the infection that you have. And so same with your cash flow. You want to figure out what the actual, the infection is, what the problem is. And there could be a bunch of problems, but there's only a certain number. And that's the good news. So we can figure out what they are by really drilling down on your numbers. So first thing is, are your margins good enough? Is there enough spread between what you're charging and what you're paying? That's the first thing. Maybe your overheads are too high. So we need to look at what your overhead percentage is and make sure that's in the right benchmarks. Maybe you're taking too many drawings, like you might be taking a lot of money out of the business and it may be not profitable enough yet to support that. Maybe you've got a bunch of loans that you're repaying. Look, maybe there's a bunch of historical debt as well. Sometimes people got a bit of money they need to pay back. And look, we've even had the situation where you might be doing a project for yourself or a friend through your business at sort of mates rates or friends rates, and that can really damage your business cash flow. So got to understand the causes, not the symptoms. That's massively important because then we can fix it. So that's the first thing. Second thing is plan ahead. So it's better to be, forewarned is forearmed. What I mean by that is your bank account it's not a static thing. Like, it's changing every day, every week. And this is the tool I'm going to walk you through today. This is going to be super juicy for you. We need to map out for the next 12 or 13 weeks what the bank balance is actually going to look like based on what we know is coming and going from our business and our bank account. And we can actually do this. We can do this pretty darn accurately. Like, we can have a real good picture for how it looks. Now, why is this important? Well, let's go through an example. Let's say, look, we're heading into Christmas vacation and holiday time. So depending on where you are in the world, you might be taking some holidays. Some be taking more than others. Let's say we do a forecast over the next 12 weeks and we can see that at the end of January, it shows us that we're actually going to be short of money because we've had to pay a lot of holiday pays and there's some tax to go out and some supplier payments and we've been closed for 2 weeks, so not as much cash has come in. If we know that now, we can actually do something about it. So we can talk to the bank, get an overdraft. We can look at, hey, can we actually bring forward some claims, get some work done more quickly? Can we take some more deposits? Can we negotiate with suppliers and push out the payments for a few weeks until the cash comes in? So you're on the front foot. You're planning ahead. There's no surprises. And here's my experience. Like, people are way more willing to help you in these situations because cash flow challenges, they can happen to all of us, even the best businesses at times. They're way more likely to help if you can go to them in advance and tell them, like, in 3 or 4 weeks, there might be an issue. Can you help us? Much better to do that than come to them the day of and kind of grovel. That's not fun. Okay, so planning ahead is huge. And the last thing is, actually, we want to run a forecast all the time in our business, and we want to systemize it and delegate it. What I mean by that is create a system around how we build our cash flow forecast, and then get our bookkeeper or our office manager or admin person or even accounts person to actually consistently update this and show it to us each week. So we, as the business owner, can have a look ahead and see what's coming and make the decisions we need to. So 3 key things we need to do there, team. First one is causes, not symptoms, what's really going on. Plan ahead so we're not surprised. And once we've got a system in place for doing our forecast, actually systemize it and delegate it to someone who can actually stay on top of it. So we don't have to, because it doesn't sound like fun doing it, right? But it does sound like fun having it done. And that's why we need someone else to do it. Okay. So what we're talking about, team, is cash flow. We're talking about how to create a system or the most important tool you need to understand your cash flow so you can be on the front foot. And if you don't have this, it's super stressful. If you do, you're going to be in control of your business. It's what all the winning businesses have in place. So let's talk about how this forecast actually looks. Now, if you want a copy of the worksheet, just comment forecast in the comments or click the download button on the page if there's a download button here as well. So here's the tool. It's called a weekly cash flow forecast. And I'm just going to talk you through it. I encourage you to download this and have a crack at it yourself as well. Really simple. We just put our business name in here. Put our business name in, and then the date. And then we're going to do some forecasting. So you'll see that the date across the top there, we've got the next 12 weeks mapped out. And we're just going to plan out how the cash flow looks. So this really, actually, probably the best place to start is at the bottom, to be honest. So let's jump in there and have a look at the bottom. Here it is. This is what we're aiming to do. You'll notice at the bottom here it's got cash position. So what we're going to do is we're going to put in our opening bank balance. We're just going to go into our bank account, how much money we've got in the bank account now, and we whack it in here. And then what's going to happen based on the forecast we do over the next 12 to 13 weeks, it's going to tell us what our forecasted bank balance is at the end of each week. It's kind of cool, right? So we can see when it's going to be good and when it's not. So for instance, we can see on the third week here, we're actually going to have negative $21,000. And we know that, hey, if we don't have an overdraft or something, we're not going to be able to pay our bills that week, so we need to do something about it. So that's the end game. We can just map out the bank balance that's forecast over the next 12 to 13 weeks. How do we put it together? Super simple. So what's our income? So all we need to do is just figure out what money do we expect to be paid each week. Now, this is the key thing. This is the little trick that you need to make sure you get right. We don't put in what invoices we're sending out. That's not what we do. We just put in the payments we expect to receive from our clients. Okay? And so some weeks you'll have a lot of money coming in. Some weeks you may not have that much. If you have a 20th of the month arrangement with some commercial clients or building contractors, etc., maybe all the money's going to come in on the 20th in that week. So you just enter in, forecast best as you can. You'll know some which are due. Maybe you'll have to make a little estimate for others. Service and maintenance work, maybe you make an estimate on how much you're going to get paid each week, and you just map it out, write it down, and that's basically the top line done. So we've got our income coming in. The next part is what are our cost of sales? So what payments are we going to have to make for our labor, our materials, equipment hire, subcontract labor, anything that we're going to have to pay to those people, we just whack it in the cost of sales. Now you'll notice typically for materials and suppliers, you'll have one payment you make once a month. So that's when you put the payment in, because obviously bank balance is going to take a bit of a hit that week. So now we know our cash from trading. So that's pretty simple. And then the next part of it, super simple. Let's just grab all the overhead costs that we have and put in the cash payment that's going to happen on the week that it's going to happen. And hey, you'll include stuff in here like tax. So if you pay, tax for employees, PAYE, pay as you go, etc. You'll put this in here. If you have GST or VAT tax, you pop this in here, the date that it's going to be paid. Provisional tax all goes in here, so you know when the money's coming out. Super, super simple. So everything that's coming out of your bank account just gets listed down, and the week that it's coming out. And so you know how much money's going out. Add all that together with your bank balance at the start, and you've got a forecast for your cash over the next 12 to 13 weeks. Killer. And then you just update that each week. And as I said, you have a system, you delegate that to someone, they keep it updated, and you're going to have a pretty good estimate of how the money's looking. And forewarned is forearmed, so you'll be able to make decisions about where you need to tweak things, where you need to change things, where the humps and the hollows are, and you're on track, you're on target, and it's all clear, and that's the key thing. So if you want a copy of this, team, please just write forecast in the comments. I'd love you to get a copy. Look, the businesses that are winning run this all the time. It's one of the things they do in their business, so they're never surprised. Because in a construction contracting environment, the cash flow can be lumpy. It's up to us to make sure that we manage it super effectively. That's our job. And when you do that, it's fun. Business is clear. You're confident about what's happening. If you don't, it's really murky and it can be super stressful and you can be left short. And we 100% don't want that. It doesn't need to happen. If you take it and plan it out, it won't. So grab copy, put forecast in the comments or click the download button. I'd love to help you with this. Take good care and remember, plan your cash flow. Be no surprises.